Welcome to Drill Down Earnings. We have quarterly results from Vertiv. It's a company we care about quite a lot. This is the business story behind one stock on the move. I'm Epistrophy Capital Research Chief Market Strategist Cory Johnson. We care about Vertiv because we care about AI. We care about data centers. And this is a company that provides technology for data centers, not least of which battery energy storage systems, thermal management solutions, liquid cooling. It's the hot thing in AI data centers. And they're partners with NVIDIA, for God's sake. All about AI data centers for this company. So Q3 earnings tell us a lot about the state of the build out of data centers for AI. So Q3 numbers were a beat. That means Wall Street underestimated these numbers, $1.98 in sales and 69 cents in earnings were expected. Instead, they got, $1.98, $1.98 billion, 2.07 billion in sales actually occurred during the quarter, and 76 cents a share for this Columbus, Ohio-based company. Now, over the year, earnings up 46%, revenues up 19%. Beyond the basic numbers and the beat and the miss, sales stayed strong here. I think that's the important thing, and that we saw an acceleration in the growth rate of sales for this company, which has been good for a couple of years now, but really strong lately, 19% in the most recent quarter. Operating margins, $272 million, really strong, and their organic growth rate of orders up 37%. So let's dig a little bit deeper beyond the headline numbers. So operating margins were up 18%, really strong for this company, continuing to improve kind of every quarter they put up results. The numbers are getting better and better, which is what you like to see when things hit scale. But their book-to-bill ratio cooled off. That is to say, the number of orders compared to the revenue run rate was down a little percent. Still more orders than revenues. That's good, 1.1 times revenues. The book-to-bill, though, tailing off a little bit, as did order growth. So when order growth slows down, still really strong. Book-to-bill slows down, still really strong. Well, you wonder what happens here. Well, the stock sold off 3% when the numbers came out in the wee hours of this trading day. But for the year, my goodness, the stock's up 193%, so no one's got anything to complain about there. But the question is, how can they manage the fantastic growth in AI? Not the stock price, it's a whole different question. But how do they manage the growth in data centers? And do they have the resources to build everything that their customers might want? Because again, when you look at that backlog, managing that backlog is really tricky. You want to take in as many orders as you can get, but you don't want to overextend yourself and not make your customers happy. And indeed, there's the underlying question of how great will this demand be with the limitations of things like power and, profitable customers. So the CEO, Giordano Albertazzi, talked about this, about their pipeline, and specifically about what it takes to build out such a fantastically growing business and making sure they've got the capacity to do so.
We look at the pipeline, we look at our at the dynamic in the industry, and we look at our strength in the industry. So we are optimistic. So that translates, of course, in growth and capacity. In general, the situation of capacity is it's not dramatically different from what we said before, but so that we always have that wiggle room to be able to accelerate in the short term if needed. That might not be true across all product lines, but in general, that ability to accelerate is there, just the way we design our capacity. But also capacity should not be viewed as something static or something that moves in step, say from one year to another, but something that is constantly growing. Yes, a new plant like Pelzer will have a step up, but in general, if you think about what we're doing across the 23 factories, there is a constant expansion on the one hand, and sometimes expanding an existing factory is faster and generates kind of a expansion and revenue more rapidly than a brand new factory, and so that's something that we do quite currently.
So building a factory to build these data factories is the name of the game at Vertiv. And the CEO, Giordano Albertazzi, talking to us about that on this morning's conference call. But what's it all mean? What's your big drill down earnings takeaway? And what's the one number that tells us a whole lot? Let's dig into that. So here's your essential summary of Vertiv earnings. This is the company that builds out data centers and so important in the world of AI. Fantastic move in the stock price over the last year. But $2.1 billion, call it, in sales, 19% improvement on a year-over-year basis. Sales are staying strong for this company, but order growth is cooling, and I think that's the one number that tells us a whole lot. The drill down earnings bite, 37% order growth on a year-over-year basis. That's really strong for this company, but a little cooler than it had been. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson. Check out our full earnings reports on YouTube. Check us out on X and on TikTok and on Instagram at Drill Down Pod.